Welcome back to Investing Talk podcast. Today we're looking at a really compelling story, maybe one of the riskiest, though, in the resource sector right now.
Yeah, it definitely is. It's a classic situation, isn't it? A pre-revenue company banking on, well, national security and the future of infrastructure. Makes it very timely.
That's right. We're focusing today on NioCorp developments. And the big question we're asking free listening is NioCorp developments a good buy right now? I mean, here's a company sitting on this globally unique asset base, but still, years from seeing any actual revenue. So we've got to weigh that undeniable strategic value against, frankly, some pretty extreme financial risk. We're going to unpack the sort of science behind their strategic importance, look at the stark financial picture, and zoom in on the specific near-term events that seem to be driving this, well, wild volatility we're seeing.
Yeah, the goal here is really to give you the full picture from the sources we've reviewed, provide that context so you can judge if this kind of risk profile works for you. It's about separating the huge potential from the, let's face it, huge uncertainty.
Exactly. And hey, before we get into the weeds, please do us a quick favor. If you find this valuable, hit subscribe, like the video, leave a comment below. It really helps get this research out there. And seriously, if there's a specific company you're curious about, one you want us to analyze next, just drop it in the comments. We do read them all, and we try to factor them into our planning. Okay, let's dive in. The big picture first. Why does NioCorp Developments even exist? And why is this particular resource getting so much attention, not just from the market, but governments too?
Okay, so it really boils down to one thing. Their unique asset. That's the Elk Creek project down in Nebraska. What's really fascinating about it is the specific concentration and combination of minerals they have there. NioCorp Developments is essentially developing North America's only advanced niobium, scandium, titanium project.
That's their moat, then?
That's the competitive mode, exactly.
Okay, that sounds impressive, proprietary even. But for the average investor listening, niobium, scandium, titanium, they're just names on the periodic table. Why are these specific elements so critical? What do they actually do?
Right, good question. We're talking about materials that are crucial for next-generation superalloys. Take niobium. It's essential for making high-strength, low-alloy steel. Think lighter, but stronger, components for cars, for defense applications. Maybe even more importantly, it's a vital ingredient in superconducting magnets, the kind used in, say, advanced MRI machines or even particle accelerators.
Okay. And scandium. I've heard that one's the really rare bird in the mist.
Scandium is. Yeah, it's almost like a magic ingredient in the aluminum alloy world. You add just a tiny bit of scandium, and it dramatically increases the strength and lightness of aluminum. This is absolutely critical for aerospace, obviously, but also for things like high-performance electric vehicles.
Yeah.
Anywhere, reducing weight is, paramount. Once Elk Creek gets up and running, it's poised to be one of the world's very, very few scalable sources of these metals outside of places like China or Russia.
Right. So the market isn't just valuing the minerals in the ground. It's valuing, well, national defense implications, technological independence.
Exactly. That geopolitical tailwind is significant. It's not just talk.
How so?
Well, the project is positioned perfectly to benefit from this trend, as the U.S. and its allies, too, look really hard at de-risking their supply chains, securing domestic sources for these kinds of strategic materials. NioCorp Developments shifts from being just another mining venture to potentially being a structural necessity. And that's why it's on the radar of, governments and huge industrial players.
Okay, that definitely sets up the blue sky potential. Huge upside if it works. But, like you said, geopolitical necessity doesn't just magically create a stable stock price overnight. We need to ground this back in the financial reality. What's the actual the financial status of NioCorp Developments right now, say, as of October 2025?
Well, the fundamental truth, the thing you absolutely have to remember, is that this is an advanced stage pre-revenue development company.
Meaning
they aren't selling anything yet. Zero revenue coming in. So the balance sheet naturally reflects all the costs of construction, exploration, not income.
And looking at the numbers we have, they certainly confirm that pre-production status, it's stark.
They do. Net income, if you look at it on a trailing 12-month basis. So the losses racked up over the past year that stood at negative $16.3 million.
Oof.
Yeah. And earnings per share, the EPS, that came in at negative $0.36 for the most recent period reported. And crucially, there's no price to earnings, no PE ratio available. You simply can't calculate one because they have ongoing losses, which is expected at this stage, but still.
Okay, so given that kind of cash burn and the fact they're just pouring every dollar into development, What does that mean for their liquidity, their cash position? And why isn't this just a binary bet? Either they get the big financing check or they crash and burn. Why would a retail investor even consider touching something with that sharp a risk profile?
That's absolutely the right question to ask.
Yeah.
And we have to be upfront about the risk. Looking at their recent filings, the company doesn't report, super strong liquidity or deep cash reserves right now. That's pretty common for development stage miners, right? You
Yeah.
raise money, you spend it, you raise more money. It's the cycle.
Right.
But yes, you hit the nail on the head. Funding the completion of the Oak Creek project, getting it built, that remains the single biggest operational risk. Everything hinges on it.
It sounds almost like investing in a biotech firm. They have this amazing drug candidate, could be a miracle cure, but they haven't finished the phase 3 trials yet.
That's a perfect analogy. Yeah.
If they run out of cash before the trial results are in, the stock could just crater. Zero.
That's precisely the dynamic. Future growth, any potential return for investors, relies entirely on successful project execution and specifically securing that massive chunk of remaining financing needed to actually build the mine and processing facilities. They need to hit that inflection point, the point where they start generating their first revenue from Elk Creek. Until they cross that finish line, the investment thesis is basically pure execution risk and financing risk.
Okay, let's pivot then to the catalysts, because clearly the market is anticipating something big. The stock has moved dramatically this year. What recent wins, say in the last 3 months or so, are fueling this excitement? And maybe more importantly, what's coming up on the calendar right now?
Okay, looking back a bit, one really crucial win that maybe some retail investors might have missed was their inclusion in the Russell 3000 index. That took effect right at the end of June 2025.
Right, the Russell 3000. What's the practical impact of that? Why does it matter?
Well, it dramatically boosts their institutional visibility. Simple as that.
Yeah.
It means that passively managed funds, index funds, ETFs, that track the Russell 3000, they're essentially required to buy the stock. Doesn't matter what their analysts think.
Forced buying.
Forced buying, exactly. And that creates predictable capital inflows, which is precisely what a development stage company like this needs to, stabilize and ideally increase its share price ahead of trying to secure a major financing round.
We've also seen just incredible price action lately. The sources mentioned a huge jump, nearly 30%, in just those 2 weeks before July hit.
Yeah, high volatility. And alongside that, we're seeing intense investor outreach. The company is clearly signaling they're making a serious push for that project financing they need. For instance, executives were scheduled to present at the Munich Mining Conference just recently, early October. That's about engaging European investors, potential strategic partners. They're clearly casting a wide net for capital, globalizing the search.
Okay, now let's look ahead. These specific dates coming up in Q4 2025, these look absolutely pivotal, almost guaranteed to drive volatility, right?
Yeah, investors definitely need to circle these dates. First up, October 24th, 2025. They've scheduled a live investor webcast. That's for results, but more importantly, a detailed project update.
Okay.
Then, not long after, November 7th, 2025. That's the official Q3 2025 earnings announcement.
And beyond just earnings updates, what about those index movements you mentioned?
Right. November 28th is another key date to watch. That's the quarterly rebalancing for the Russell indices and related ETFs.
More potential passive flows.
Could be. Again, these passive capital flows can definitely influence the price, independent of company news sometimes. Then fast forward just a bit to December 5th. That's when we should see the disclosure of institutional holdings. That lets the market see which big funds, which institutions have been building positions leading into year-end. Always interesting data.
So putting it all together, the key focus through all these upcoming announcements, it's not really about revenue yet, obviously. It's about confirming progress on technical milestones, hitting targets, and most critically, any hints, any confirmation about securing commitments for that massive project financing. That's the linchpin.
Absolutely. The market is going to trade aggressively on any news, any update that suggests they're making real progress toward locking down that capital solution. That's the story right now.
And all this high anticipation, it's clearly translated into just remarkable technical momentum in the stock itself. I mean, the run-up has been one of the standout stories this year.
Oh, the run has been relentless. It's incredible. Shares have surged nearly, 8 times over the past year, moving from a 52-week low around $1.27 way up to a high of $11.43. The fact that it's currently holding around $10.39, even after that run, it signals massive underlying bullish anticipation in the market. People are betting something big is coming.
And technically speaking, that momentum looks pretty solid right now, doesn't it?
It does, yeah. From a charting perspective, the price is trading firmly above its key moving averages, way over the 50-day simple moving average, which is sitting down around $5.44,
Wow.
and vastly above the 200-day SMA, that long-term trend line, which is way down at $3.10. That's a classic textbook signal of really strong medium and long-term momentum.
But with that kind of explosive price movement comes extreme risk, right?
Oh, absolutely.
Yeah.
Volatility is very high. Annualized, it's running at about 27.3%.
So high risk, high reward territory.
Exactly. That spells a high-risk scenario, no doubt. But potentially one with equally high reward if things break right. Technical forecasts we've seen suggest there could still be maybe 4 to 10% upside in the very near term, maybe testing those recent highs again. There seems to be pretty solid support around the $9 level, with resistance up near $11.50.
Okay, let's touch quickly on analyst sentiment. Given how fast and how far the prices run, are the professional analysts keeping up? Or are they lagging behind the market action?
Well, they seem to be struggling a bit to adjust their models, frankly. The consensus ratings range from strong buy down to hold, so mixed signals there. But here's the interesting part. Many of the published price targets, which average somewhere between, say, $5.75 and $8.25, they look technically out of date already.
Because the stock just blew past them.
Right. The market's excitement, the speculative buying, had just completely outpaced those traditional valuation models they use.
So that gap, that divergence between where analysts thought it should be and where the price is, that strongly suggests the market is trading heavily on speculation about future events, doesn't it?
Exactly.
What's the chatter? What are the unconfirmed rumors currently influencing traders and driving this?
Okay, there seem to be three critical pieces of, let's call it speculative buzz floating around. First, and probably the biggest, is talk of an imminent announcement of major construction financing for Elk Creek. If that happens, it would massively de-risk the project almost overnight.
Okay, that's huge. What else?
Second, there's persistent talk about a potential strategic offtake agreement being signed.
Okay, hold on. For listeners who might not be familiar, break that down. What exactly is an offtake agreement, and why would that be so pivotal for NioCorp developments right now?
Good point. An offtake agreement is essentially a long-term contract. A buyer, maybe a big aerospace company, or an automotive manufacturer, agrees in advance to purchase a guaranteed amount of the future mineral production, usually at a pre-agreed price or based on a formula.
Ah, okay. Locks in future sales.
Exactly. And for a company like NioCorp Development, needing billions for construction, this is pivotal. Why? Because having guaranteed future revenue streams locked in, that's often the essential security, the collateral that banks need to see before they'll sign off on those massive final construction loans.
Got it. So the rumor is they're close to signing one with a major player.
That's the chatter. A big name partner signing an offtake would be a massive validation and could unlock the financing.
Okay. And the third major rumor ties back to that geopolitical angle we discussed earlier.
It does. It concerns anticipated, or maybe just hoped for, favorable legislative developments, either from the U.S. government or maybe the European Union. Things related to critical minerals.
Like what, specifically?
Well, if the government were to step in and offer things like direct subsidies for production, or maybe low-interest loans specifically for critical mineral projects, or even domestic purchasing guarantees saying, we'll buy X amount, any of those things would immediately make the project economics look dramatically more favorable, boost the potential returns, lower the risk.
But again, these are just rumors for now, driving sentiment, but not confirmed facts.
Correct. Purely speculative catalysts at this point.
Okay, let's try and wrap this up then by summarizing the overall investment thesis here. How should people listening think about this company right now?
Taking everything into account, our analysis points towards an overall bullish rating. But it's conditional, maybe an 8.5 out of 10, but based entirely on what you'd call an asymmetric risk-reward scenario.
Okay, break down that asymmetry for us. What does that actually mean for someone considering an investment?
It means the potential upside, if things go right, appears significantly larger than the potential downside, even though the downside risk is very real, potentially losing most of your investment. If they fail to get the financing, if the project stalls indefinitely, yeah, the stock could drop dramatically. However, the big if they succeed, if they navigate these next hurdles and actually transition into production, then the strategic importance, the geopolitics, the scarcity of these minerals, all those factors could lead to a massive fundamental re-rating of the company's value.
Yeah.
We could be talking multiples of the current share price. And that potential is driven entirely by that highly strategic competitive edge they hold in the critical metals supply chain.
So, thinking about the investment horizon, it sounds like there are two distinct ways to play this, either a very short-term trade or a much longer-term hold. Is that fair?
That's exactly right. It looks highly attractive, potentially for short-term traders trying to capitalize on these upcoming Q4 2025 catalysts. The earnings updates, the webcast, index rebalancing moves, any financing news.
Riding the volatility.
Riding the volatility, hoping for a positive news spike. But then for the long-term holder, the buy and hold investor, you're really waiting for that big structural re-rating. And that will only happen if, and it's a big if, Elk Creek actually enters successful, profitable production sometime down the road.
We absolutely cannot let our listeners go, though, without hammering home that primary concern one last time.
Agreed. The number one risk, overshadowing everything else right now, is financing completion and execution. Full stop. Any significant project delays, any major cost overruns beyond what's budgeted, or ultimately a failure to secure those final massive financial commitments. Any of those would likely have an outsized, immediate negative impact on the share price. It could erase these recent gains very, very quickly. Operational execution is absolutely everything at this stage.
That sets up a great final thought for everyone listening to mull over. We know the company's trajectory, its stock price right now, is basically anchored entirely to future events, specifically removing that project execution risk. So here's the question. If NioCorp Developments does manage to pull it off in the next quarter or two, if they successfully secure both the necessary construction financing and maybe land one of those big strategic offtake agreements, how quickly would the market price in that fundamental shift, that change from project risk to production potential?
That's the billion-dollar question, isn't it? That transition from being a speculative development story to becoming a tangible, revenue-generating strategic asset. That's potentially the moment of maximum fundamental value creation.
Yeah.
It's the moment they stop being just an idea, however promising, and start actually being a critical part of the solution.
A fascinating situation indeed. Thanks for guiding us through this really complex analysis of NioCorp Developments today. We'll be back soon with more insights on the companies and the trends moving the markets.